All right, I think we're ready to get started today. Hello, everyone. Welcome to today's webinar, Understanding Form 990. My name is Audrey Lemon, and I am a member of DWD's nonprofit team. Before we get started, I just wanted to give you some reminders. If you have questions during the webinar, please submit them through the Q&A screen. If we don't have the opportunity to answer all of your questions during today's session, we will follow up with you in an email. A copy of today's slides will be emailed to you after the webinar. And in addition to that, the webinar will be recorded and a copy will be made available on our website. And now I'd like to turn it over to Carrie Minnick.
Thank you, Audrey. And again, thank you all for attending today. Today, we're going to be talking about Form 990, which is a very important document for all nonprofit organizations. We're going to start off by talking about some just basic information about the form and then get into the actual looking at different sections of the form. So don't worry, we're not going to go through every page of the form, but just want to highlight some key areas that's important for you to look at when you're reviewing your own organization's Form 990. So let's get started. So if we start with the basics, there are 4 different versions of Form 990. And so which form your organization files primarily rests on your gross receipts and total assets. Now, private foundations, if you are a private foundation, you will file Form 990 PF regardless of your assets or revenue. All private foundations are required to file Form 990 PF. However, if you are not a private foundation and your gross receipts are more than $200,000 or more, or your total assets are $500,000 or more, then you would file Form 990, and that's sometimes referred to as the full 990. If your gross receipts are less than $200,000 and your total assets are less than $500,000, you can file Form 990 EZ, which is a little bit shorter form than the full 990. Then if your gross receipts are less than $50,000 on average, you can file Form 990N, which is even a simpler form that's filed with the IRS. Now, do keep in mind that there are some organizations that have to file a 990 or 990 EZ and cannot file Form 990N. For example, supporting organizations cannot file a Form 990N. Also, keep in mind that when we're talking about gross receipts, we're talking about the total amount received from all sources before deducting any kind of costs or expenses. That's why it's so important to make sure that you do keep documentations to show the amounts and sources of your income to show that you have filed the proper Form 990. If you are a church or a religious organization related to a church, you do not have to file Form 990. So churches are primarily the only nonprofit organization that are exempt from filing Form 990. So most everyone else, if you are a nonprofit, does have to file one of these forms each year with the IRS. Real quick, for those smaller organizations that are able to file Form 990N, this is a very simple, it's called a postcard that is filed with the IRS. It basically asks for your tax period. You have to check a box that your gross receipts are normally $50,000 or less, and ask for basic information about your organization, your name, DBA, mailing address, EIN, and so forth. So it is a very simple form to file. So for those smaller organizations that do have less than $50,000 in gross receipts, the IRS has made it a little bit easier in use, so you can file just the simple form. So how do we file this form with the IRS? Well, the form, which regardless of which form you file, it does have to be filed electronically with the IRS. No paper returns. It is due the 15th day of the 5th month after the end of the organization's tax year. So for all of you organizations that have a December 31 year end, your tax return, your 990, is due May 15th. For all of you that have a June year end, your 990 is due November 15th. Now, if you do have a circumstance where you're unable to file by that deadline, you can file for an extension. You do that on Form 8868. So as long as that extension is filed with the IRS by the original due date, you can receive an automatic 6-month extension. It's perfectly fine to file an extension. There's no additional fee. There's really not necessarily anything negative about it. So I know some organizations just don't have the information together by the due date, or they're waiting on an audit to be finished. So it's perfectly fine to file that extension. You just need to make sure that it's done by the original due date. If you are filing a Form 990N, however, those smaller organizations, Form 990N cannot be extended. And so you do have to make sure that you get that filed by the original due date. If you fail to file your return by that due date and fail to file an extension, that's not good. We don't want that to happen. There are fines and penalties. As you can see on the screen there, the IRS does implement those for organizations that fail to file a return with the IRS. Also, keep in mind that an incomplete return is considered a return that's not filed. So if you do not answer the questions properly, if you do not file the correct schedules, it's not a complete return. If you file a return on paper, when you are required to file an electronic return, then the IRS also considers that a return not filed. If you fail to file a return for 3 consecutive years in a row, the IRS will automatically revoke your IRS determination as a tax-exempt entity, which is not good. We do not want that to happen, because then that means you are not a nonprofit organization that can accept, donations from individuals that can be deducted on their tax return. You have to go through the whole process to file to be exempt again. So we really, really want to make sure that you do file those returns every year to make sure that you are not automatically, that you don't automatically lose your exempt status. This probably doesn't apply to most organizations with us today, but just for those that are starting out or thinking of those thinking of starting a nonprofit, if you are an organization, a very new organization that you're just starting, you haven't applied to be a nonprofit yet, or you're in the process, you do need to make sure that you're filing Form 990 for every fiscal year after the date of your incorporation. There is a box on the 990 to mark that says your application is pending. So just making sure that if you are in the process or have recently applied to be exempt with the IRS, that you do start filing those Form 990s. Okay, so Form 990 is not a tax return. So it is totally different than our for-profit counterparts that have to file a tax return with the IRS that show how much income they have, deducting the expenses and calculating an income, the net income and income tax. That is not what the 990 does, and that is not what it is used for. The 990 provides the IRS and the public about non-financial information, your programs, your activities, the relationships amongst your board members, and governance. It also does provide some financial information, but it goes beyond that. It's really used by the IRS to ensure that an exempt organization abides by all of the tax laws. And again, because it is open to the public, it is used to show that your organization is operating properly as a tax-exempt entity under the eyes of the IRS, that you are in compliance with applicable tax laws, that you're well governed and managed, hopefully, furthers the missions through its exempt activities, and provides valuable resources to the public. So it's really, really important that the Form 990 is not only filed, but it's also filed properly and the questions are answered properly. And as I noted, that it is a public document, so that means anyone can go and get access to your Form 990. So there are various, the IRS has recently made a nonprofit organization 990s available, so you can go search for an organization on the IRS website. GuideStar, Candid, there are other websites that provide those tax returns, the 990s that are available to the public to look at. Now, one thing to keep in mind, that this Schedule B, which we'll talk about a little bit later, is where we report our donors' names, addresses, and dollar amount over a certain dollar amount for each entity. The names and addresses on Schedule B are not open to public inspection. So if you are putting a copy of your 990 on your website please make sure that your Schedule B does not include donor names and addresses. I know when we prepare Form 990s for our clients, we always provide a public disclosure copy for them that redacts those names and addresses. So make sure that you're not making those available to the public. Along with your Form 990, your application for exemption that you filed with the IRS, Form 1023 or 1024, is also open to public inspection, as well as Form 990T, which is the form that reports any unrelated business income. If you fail to provide a copy to someone that comes and asks you for a copy of your 990, there are penalties that the IRS does impose. So just make sure that you have that form available. Again, you can put it on your website and that suffices. You don't have to put it on your website, but you can just also, provide them a copy or email them a copy if somebody asks for a copy of your 990. Okay, so those are kind of some of the basic items about Form 990. So as we actually look at the form, we have a core form of the 990, and we're going to be talking about the 990 today, not the 990 PF, not the 990 EZ or the 990N, but just the 990, full 990, because that's what most organizations do have to file. So of that Form 990, there is a core form that consists of 12 pages that all organizations have to complete. Now, in addition to that, there are many schedules that, depending on your organization and its activities, you may or may not have to complete. Now, I have never seen a nonprofit that has had to complete every single schedule, so don't get too scared. The ones that I've highlighted in bold here are the ones that we're going to talk about today and that most organizations have to file. The Schedule A, which talks about your public charity status, which is very important to nonprofits. Schedule B, which I referred to a little bit about the donors. Schedule D, Schedule G, and then Schedule O. So we're not going to go through every one of these, but I just want to make you aware that there are several schedules that, depending on your organization's activities, you may have to file an additional schedule in addition to the core 990. So when we look on the first page of the 990, we're looking at the core form here in the header. We want to make sure that we are putting the proper year on this return. So if you're a calendar year, it's pretty easy. The little number there in the top, the year 2023, if you're a calendar year 2023, that's the form you file. Now, for those organizations that are fiscal years, it's going to be off a little bit. So for example, if you are a June 30, 2023 year end, that number in the top corner there, that year, is actually going to be the 2022 form, not the 2023 form. So you want to make sure that you're filing the correct form and that you have the right year for what your fiscal year is, whether it be a calendar year, a fiscal year ending in June, March, whatever it is. Make sure you have the correct reporting period on there. If you change your address, you need to notify the IRS that has been changed. And so you can do so by clicking the address change box. If you change your name, you need to notify the IRS. And so you can check the name change box. The IRS also asks for your website. They do supposedly look at it to see what's on there. So make sure that if you do have a website, you put the website's address on there, and please make sure it is the proper website. If you update your website address, make sure you update it here on your 990 as well. The next section, part 1 here of the first page, is really a summary of the rest of the form. So the very first question asks, briefly describe the organization's mission or most significant activities. So you really want to put something catchy, something that's going to draw the people's attention on this line. This does not necessarily need to be your exact mission. It could be your mission statement, or it could be something else. Just remember that this is the very first thing that the reader is looking at when they look at your 990. So what do you want to tell them about your organization? Number 3 and 4 asks about your board. And how many voting members of the governing body at the end of the year? So number 3, when we're looking there, so if you have, during the year you had 20 people serve on your board, but at the end of the year only 15 people can vote, you would put 20, or I'm sorry, you would put 15 on here because it's asking for the number of voting members at the end of the year. Number 4 asks for independent voting members. So the IRS thinks that a well-governed organization consists of independent board members. So independent board members are board members that are not paid by the organization. So for example, if your executive director serves on your board and does have voting rights, most often they do not, but if your executive director does have voting rights, they would likely not be included in this number because they would likely be paid by the organization. So make sure that you have those numbers correct and that it's the number of voting members at the end of your fiscal year or calendar, your reporting year here, and then also in what independent means. It also asks about the number of volunteers. And the reason this question is important is because it shows how much support you're getting from the community. So not only would it be volunteers, people that come and maybe volunteer with your program or answer phones, but it's also going to be your unpaid board members that go on this line. It can be an estimate. You don't need to have an exact number, but you should, this number 6 really should never be 0 because all nonprofit organizations have to have board members. And so at least you're going to put your number of board members that are not paid on this line. And again, it really shows that you're getting support from the community for your programming and operations. On the bottom of the first page, the return asks for a signer. And whoever signs this return must be a current president, vice president, treasurer, assistant treasurer, chief accounting officer, or other corporate officer who is authorized to sign as of the date this return is filed. So basically, it's an officer of the organization. Normally, it's the executive director or board treasurer or board chair. You just need to remember that it's that position as of the date that this return is filed. So they may have not necessarily been in that position during the year that we're reporting on, but as of the date that this return is filed, that's the individual's name that needs to go in there. All right, if we move on to the next page, this is where we have to report our organization's mission. And this really should be your official mission that has been approved by the board of directors. So make sure that you do have one of those in place, that the board looks at that every so often, has approved it. If there are changes to it, make sure that that does get updated. The IRS asks if there are any significant changes to the organization during the year. So first of all, we have to talk about what is significant. So let's say you have an organization that provides some like reading support for helping kids learn how to read. So let's say during the year you added a additional program for adults that have learning disabilities that need help learning how to read. That probably would not be considered a significant change because it's still the same type of programming that you're doing. You're just expanding the audience. Now, if you decided to go off into a whole different direction that doesn't have anything to do with education or reading, then you would want to check this box yes and explain to the IRS what those changes are. The reason is that because when you first initially applied to the IRS to be a nonprofit on your tax-exempt application form, you requested to be exempt for a certain purpose. Sometimes that purpose changes, which is fine, but you have to let the IRS know, you have to let them know about that because they initially approved you for a certain purpose. And so if for some reason you changed and that veered way off from what they originally said, okay, you're going to be a nonprofit, it could possibly be considered unrelated business income, and you may have to pay unrelated business income taxes on it. So just make sure that if you do make any significant changes to your programming, that you do notify the IRS of those changes. Here on page 2, we also have to report our largest program service accomplishments. There's a spot for 3. You put the top 3 largest based on expenses, and then you kind of summarize the rest of them. This is a really good opportunity for you to talk about what your organization did during the year, to brag on what you accomplished. How did you impact the community? How many people did you serve? I've seen oftentimes where people just repeat their mission. I would highly recommend that you do not do that and that you actually take the time to expand on what you accomplished during the year. Don't feel limited to just these lines here. There is an overflow statement that you can add additional wording to. So really use this opportunity to brag on what your organization did during the year. Maybe have your marketing person or development person look at it and add wording to it. Because again, this is open to public inspection. Your 990 may be the only thing that some people see of your organization. So whatever they read on your 990 is all that they know about your organization. So it's a really good opportunity to provide some advertising, marketing about what your organization does. Okay, the next few pages, I am not going to go into in depth, but this is basically a checklist of a bunch of different questions and how, if you check any of these yes, there may be an additional schedule that you need to file. So I just want to make you aware that there are several questions asking about specific activities during the year, and whether you answer them yes or no depends on if you have to file additional schedules. Okay, moving on to page 6. This is the governance management issue. This is really the crown jewel of the 990 is what the IRS refers this section to. When the 990 was redesigned, it's been several years now, but this was the part that was added, and this was the part that they really focused on. The IRS believes that there is a close link between good governance and tax compliance. So this is where they're asking you a bunch of questions about your governance, your board of directors, your policies, that type of thing. First question is the same basically question that we already talked about, the number of voting members on the governing body at the end of the year. The number of voting members, again, who are independent, because remember, the IRS likes to see an independent board of directors. Then it asks if any board member or key employee, which would be your CEO or executive director, had a family or business relationship with any other director or CEO, executive director during the year within the organization. So they want to know about those relationships. So that would be if anyone, maybe owned a business together. If they just worked at the same place, that's probably not something that needs to be reported. But if they have some kind of management decision-making or ownership, then that would be needed to be reported. You also don't need to get into specifics. You can just say John Doe and, John Doe and Sarah Doe have a family relationship, or this person and this person have a business relationship. You do not need to get into the details of what the relationship is. You just need to disclose that relationship. Because again, the IRS likes to see an independent board of directors. Another question is whether the organization made any significant changes to the governing documents. So that would be changes to your bylaws or articles. So if you made any changes to those, you need to, again, notify the IRS of what those changes are. You do not need to attach the copy of those changes. You just need to explain what those changes were. Okay, number 5 is kind of an interesting question. The IRS asks, did the organization become aware during the year of any significant diversion of the organization's assets? This question is really asking, are you aware of any fraud within the organization during the year? And again, there is a limit as to, they're looking for a limit when they say significant. I think it might be $10,000, but it's a pretty large amount. So they are actually asking, did you have fraud during the year? Yes or no? Kind of an interesting question. But moving on. Number 8 asks if you kept minutes. They're asking if you kept written minutes for board meetings and then also for each committee. So hopefully everyone does that. If not, that might be something to start doing because the IRS is asking you if you are keeping those minutes for both board meetings and also committee meetings. Okay, next section here talks about policies. So when we talk about these, the IRS notes on here that, these policies are not required by the Internal Revenue Code. However, they are asking if you have them in place. So it's probably a good idea that if you don't have them in place, that you put them into place. It's also best practices that you have these policies in place. And in order to answer these questions, yes, you do have to have the written policy in place during the year. So if you're working on the policy or implemented it afterwards, you would answer the question no, but you could explain in a different schedule that, it has been implemented after year end. The first one I want to talk about is, actually it's not a policy per se, but it is a question. The IRS asks if a complete copy of this Form 990 has been made available to all members of the governing body before filing this form. So there's a couple different things we have to think about here. So when we're saying a complete copy, an exact copy of what is being filed with the IRS needs to be made available to all members. So Schedule B with the names and addresses of the donors has to be included to your board. If it is not an exact copy of what is filed, you have to answer no. It's also saying to all members of its governing body, if you only provide your copy of your 990 to your finance committee, then you would answer this question no. The copy needs to be made available to all board members. Now, this can simply mean sending it via email to all of your board members. That would suffice. They don't necessarily need to take a formal vote and approve the form before it's filed, although that would be a good practice. It just needs to be made available to everyone before it's filed. Then it goes on to ask how the organization reviews its Form 990. So you would write up a statement saying that it's provided to all the board members prior to filing, they review and take a vote on it, or if you don't do that, your finance committee reviews it or your board treasurer reviews it. The IRS just wants to know, who is looking at this 990 before it gets filed with them. Does the organization have a written conflict of interest policy? So if you do not have one of these in place, I would highly recommend that you put one in place. It goes on to ask whether the board and key employees have to annually disclose that. So is the form filed or signed by these individuals annually? If it is not, I would highly recommend that you start doing that. Then it asks how the organization regularly monitors and enforces the compliance with the policy. So if you have a policy, here's our conflict of interest policy, we send it out, everybody signs it every year, we're done. Well, you have to answer no, because you're not really monitoring and enforcing the compliance. How is your board or executive committee or finance committee, how are they enforcing compliance with that policy? How are, if a potential conflict comes up, how are they addressing it? That's what they're looking for in this question. Does the organization have a written whistleblower policy in place? A document retention and destruction policy in place? So again, if you don't have these policies in place, I would highly recommend that you put them in place. We do have sample copies of these, so if you would like a copy, please let us know. We'd be happy to email that to you afterwards. But if you don't have these in place, we highly recommend that you consider putting them in place. Not only to answer this question, yes, but it also is just best practices to have these policies in place. Number 15 talks about the process for determining compensation of your executive director or CEO, and then any other key employees as well. So the IRS is very focused on making sure nonprofit CEOs, executive directors are not paid an excessive amount. Now, around here in Northeast Indiana, that's usually not an issue. However, you should still have some kind of process in place that notes, documents how your CEO or executive director's salary is determined. Do you look at other organizations of similar size in the similar location to see what they're paying their executive director? Is it reviewed every year? Is the salary and benefits reviewed every year by the executive committee or the board? And then is it approved? So that type of thing. You really need to make sure that that is maintained by the organization. So if the IRS or someone came in and questioned how that person's salary was determined, you have documentation to prove that. Okay, next question here in section C asks again about the public disclosure. So again, we talked about how, your Form 990 is supposed to be made available to the public. So how do you do that? And then also your Form 1023 or 1024, your tax exempt application, asks about that. So how do you do that? Do you put it on your website? Is it on someone else's website? Now, when you say someone else's website, that does not mean the IRS website. That does not mean Candid. That does not mean GuideStar. That would mean maybe like a national organization that you're related to, and maybe they put it on their website. If you make it upon request, the IRS wants to know again how you're fulfilling that responsibility of making these items available to the public. And then also it asks about governing documents. So do you make your conflict of interest policy or your financial statements available to the public? So you are not required to make these items, a conflict of interest policy or financial statements, available to the public. You do not have to. So you could say, no, we don't make these available. But you could also, some organizations put them on their website, so you could answer the question, yes, we put these on our website, and that's how people access them. So again, the IRS wants to know about transparency and how you're making different documents available for the public to review. On page 7, the IRS asks for a list of board of directors. So this is really important because these people that are listed here are ultimately responsible for this organization during this time period. So you want to make sure that you list everyone, anyone that served as a board member at any time during the year, even if if their term expired, like mid-year, you would still want to put them. So you're going to put their name and title here. You're going to put the average hours per week that they provide to the board service. So, it could be 2 hours, it could be 1 hour, it's just an average. When your executive director or CEO needs to be listed here as well, I see oftentimes that people will just put 40 hours for their executive director or CEO. I'm pretty sure that most CEOs or executive directors work more than 40 hours. So don't be afraid to put 50, 60, whatever they actually work here, to show their dedication to the organization and the actual hours that they work. We also need to kind of classify them as to what type of position they hold. So the most common ones are individual trustees or directors. So those are your board members. If you're just, all your board members are going to be an individual trustee or director. An officer is going to be those individuals that have been either hired or approved or voted to serve in a different capacity. So your officers are going to be your board of chair, your vice chair, your secretary, and your treasurer. Those individuals have been voted in and approved to an officer position. Your executive director, your CEO, is going to be also listed as an officer because they have been hired specifically to oversee the day-to-day operations of the organization. Some organizations are large enough where their CFO or our top financial person will also be listed as an officer because they have been hired to oversee the financial aspects of the organization. However, many times with smaller organizations, that really falls on the executive director. So the CFO is not listed here. It really depends on the organization as to what the responsibilities are of that top financial person as to whether they are listed or not. Key employees and highest compensated employees are based on the salary that these individuals get. And it's a pretty big amount, $100,000. So most with nonprofits, especially the smaller ones, don't have key employees or highest compensated employees, but some of them do. So if you do have employees that are paid at a higher rate, you would need to list these there as well. You also need to report their salary from a W-2 or a 1099 if they got from the organization. That needs to be listed here. If they receive any compensation from a related organization. So for example, some organizations will have a 501c3 or a separate entity, and then they'll have they'll have the main organization, the main entity that does the programming, and then they might have a separate foundation that's like separate legal entity. So for example, if the same individual was really the executive director of both of those entities and they got paid from both of them, they would have to report that related salary from the foundation in this column E here as well. Then the IRS also asks for other types of compensation. So this would be like your health insurance that the organization pays for, retirement, those type of other benefits really need to be reported on this form as well. Next, again, this is just the board. Next is we get to the actual financial. So all of the stuff we talked about so far is really not financial. It's reporting about your organization, your governance, your policies, your programs. Finally, on page 9, we get to some financial information. This is where we report our revenue. Revenue gets reported on the 990 as to the type. So we have contributions, grants, program, other revenue, but also whether it is exempt or not. So we have not only total revenue, but we have to put it in kind of a different bucket. So is it related to your exempt function? So like your program service fees that you charge for services that you provide, that would be related revenue. Unrelated business income. So if you have advertising income or rent income on debt finance property, you might have some unrelated business income. So that would go in column C. Or revenue excluded under the certain section of the IRC code in column D. So that would be like interest income, gains and losses on investments or property. That income is specifically exempt, excluded for nonprofits, and so that would go into column D. In-kind services and in-kind facilities are not recorded on Form 990. In-kind goods are, but if you receive any kind of donated services or facilities, they are not reported on Form 990. So if you're comparing your revenue on your financial statements, maybe your audited financial statements to your 990, that will be a difference. Page 10 then goes into your expenses. And so again, we report all of our expenses just like we do on the audit. However, if we have in-kind services or in-kind facilities, they do not get reported. We also have to report our expenses by function. So we have program, management in general, and fundraising. So the IRS wants to see that specifically for 501c3 and 501c4. If you are a different C5, 6, whatever, you do not have to report them by function, but all C3s and C4s do. And so again, the public is looking at this, and so they're going to see how much of your expenses is spent on program versus management in general and fundraising. Most oftentimes, it really depends on the organization, but 70 to 75% usually is what people are looking for as being spent on program. Because then that means that money that's coming in, most of it is going towards program to what you're doing. However, there are some circumstances where you might have a capital campaign going on during the year. And so your fundraising expenses is going to be a lot higher. So it might, get up to 20% or something because you have those extra expenses this year. So again, it varies on the organization. It varies on what the organization is doing during the year. Next, we have our balance sheet. Not really going to go over that too much. And then a reconciliation of net assets and financial statements and reporting. So under the financial statements and reporting, I want to point out a few questions here. The IRS asks if your organization received an independent compilation or review during the year, or if you had an audit done. So if you had one of these done during the year, you would check yes. And then it also asks if you had a committee that assumed responsibility for oversight of the audit, review, or compilation. So that would be your finance committee, your audit committee, or maybe just your board. But is your board actively reviewing that statement that's provided by that independent accountant during the year? The IRS wants to know that. The IRS also wants to know if you have to have a single audit done. So nonprofit organizations that spend currently $750,000 or more of federal funds during the year, there are some, this is kind of a general statement, there are some exceptions to that. But if you get federal money in and spend $750,000 or more during the year, you're required to have a single audit done. It's a special type of audit. And so the IRS again wants to know, were you supposed to have one done, and did you have one done? Okay, so that's the basic core form that all nonprofits have to complete when they're filing Form 990. I want to talk briefly about some of the schedules that most organizations have to file. The first and most important one is Schedule A. So When you became an exempt nonprofit organization, way back when you applied to the IRS, they said you're either going to be a public charity or a private foundation. If you're a private foundation, it means that you get your revenue, your contributions, grants, sources of revenue from one source or very limited number of sources. If you are a public charity, you are getting your sources from your revenue sources from a bunch of different people. So it could be foundations, it could be other nonprofits, it could be corporations, it could be governments. So it's okay. So that's the two different types. You're either private foundation or public charity. They have different rules. Private foundations are required to distribute a certain percentage of their assets every year. They have to pay excise taxes, and as we said, they have to file Form 990 PF. Public charities do not have the rules like that. There's no excise taxes each year. They don't have to have a required distribution. So once you become a public charity, you really want to make sure that you stay a public charity. Now, there are instances where you might want to become a private foundation, but usually public charities want to stay a public charity. So the IRS has this calculation every year that looks to see whether you continue to be a public charity. And this is done on Schedule A. So on Schedule A, the very first part, it asks you, okay, why are you a public charity? So there are different options to choose. Most often it is number 7 or number 10. So again, either you are an organization that normally receives a substantial part of your support from a government unit or the general public. So you're getting a bunch of contributions from a lot of different sources, or you're receiving more than 33 1/3% of your support from contributions, membership fees, etc. So if you have program service fees, you're probably going to click number 10. If you don't, and you're just relying on on contributions, it's number 7. Now, this does not change every year. The IRS has already told you which one you are when you apply for tax exempt status. So you're going to go to your IRS determination letter to look for sure what you are. And that number, that's what you are. It doesn't change. So once you've answered this, then the IRS is going to do this support test. So when you're looking, the support test is very complicated. I'm not going to go into it here, but you need to know on your Schedule A, you need to look at this Section C and determine to see what your percentage is. You want to make sure that that percentage in line 14 and 15 is at least 33 1/3%. If it is at least 33 1/3%, then you have met the requirement to be a public charity for the year. That's good. We want that. There are 2 different public charity or public support tests, and which test you complete depends on whether you picked a number 7 or number 10 in that first part. So you're not going to do both of these public support tests. You're only going to do one based on what number you picked on that first page. So for the first one, if you are under this part, you're going to make sure that it's 33 1/3%. If for some reason you do not meet 33 1/3%, under this test, there is a facts and circumstances test where you can go in and look to say, okay, we didn't meet the 33 1/3% this year, but there are some other facts and circumstances that pretty much we're going to meet it next year, and here's why. Okay. If you marked the 10, then you're going to have to do this other support test. Again, it's the same thing though. You want to look at Section C in line 15 and 16 to see if you have met that 33 1/3%. If you've met the 33 1/3% on this section, you're good. However, there is no facts and circumstances test in this section. So if you haven't met it, you're done. You're considered a private foundation. So again, the key here is you need to know where you're getting your support from. And this calculation is based on the current year and the previous 4 years. So they do a calculation. So you want to look at your 990 on Schedule A at the bottom and see what your percentage is. You want to make sure that it's above 33 1/3%. That means you've met the public support test and you're good. If you look at that percentage and it is decreasing, like let's say 1 year it was 90, then it went down to 80, then it went down to 60, that's you probably need to look into that. There's a question, what's going on here? Why are we decreasing that percentage? And we need to make sure that it doesn't go down below 33 1/3%. The other thing you need to watch is that if you, for some reason, one year you get a really large grant and you don't normally get that grant could put you over the cliff as depending on who it comes from. And that grant makes you, hey, you're really a private foundation because you got so much money from that one supporter this year. However, in the calculation, there is an exception for unusual grants. So again, I don't expect, most people don't know how to calculate the support test, which is perfectly fine. The person who doing your 990 should know how to do that. But you, as the reader of the 990, as either the CEO, the executive director, the board member, you need to know that there is a public support test that is being done. It is based on where your revenue is coming from. And it is important to make sure that you are meeting that 33 1/3%. Because again, if you don't, you're going to become a private foundation. Most public charities do not want to become a private foundation, and it is very difficult to go back to be a public charity after you have flipped over to a private foundation. If anyone has additional questions on this, please feel free to reach out to us, and we can talk about those on more unique basis to your organization. The next schedule I want to briefly talk about is Schedule B. So again, this is the schedule where, depending on your organization, you will need to report donors that have given either $5,000 or more during the year, or a certain percentage of your total revenue. So as you can see, it does ask for the name and address of the donor and then the total amount contributed. Again, this part does get filed with the IRS. However, this part is not available for public inspection. So the public inspection copy will just have a dollar amount in column C there for total contributions. It will not have the name and address. So you want to make sure again that that is not open for public inspection. If you get anonymous donors, the IRS does not like it if you put anonymous on here. They think that as a nonprofit organization, you should know the name and address of who you're getting your donors from, or donations from. I know sometimes there are anonymous donors, but I'm just throwing that out there. So if you have to put anonymous and you just simply don't know who it is, that's what you put, but you really need to try and find out who the name and the address of those those donors are. Something else with Schedule B that's really been a hot topic recently is donor advised funds. So for example, the community foundations commonly have donor advised funds, where let's say I say, okay, I'm going to put $50,000 into a donor advised fund at the community foundation. Then once I put that money into the community foundation, I am recommending to the community foundation who that money goes out to. So I put $50,000 in, I could take a $50,000 charitable donation deduction on my 1040 when that happens. Then over the years, the next year, let's say, hey, community foundation, I think you should give $5,000 of that money that I gave you last year to ABC organization. So when that community foundation gives that $5,000 to ABC organization, that gets recorded on Schedule B as coming from that community foundation, not from me. So I know a lot of organizations, sometimes it gets a little tricky in recording where your donations are coming from. So when you get that $5,000 ABC organization, really it should be recorded as coming from the community foundation, but you probably also want to note that it is also from me. So that way you can send a thank you to me as the donor, but then also make sure you report it correctly on your Schedule B. It's important to record these correctly because money coming from donor advised funds is considered publicly supported money, not individually from me, and that really impacts your can impact your public support test. So I know donor advised funds is a very hot topic, and the IRS has been trying to make some changes to those recently. So just make sure that you know where your donations are coming from. And if they are coming from a donor advised fund, that you do document that so it does get reported properly on your 990. Next is Schedule O. This is what it is. It's basically a blank sheet of paper, but I wanted to show it to you because there are some questions on the 990 that you cannot completely answer in that little section that they have. So don't feel limited, especially for like program service accomplishments. When we talked about, bragging on what your organization did during the year, don't feel limited to that little section there on in that part of the page. You can go ahead and write as much as you want, and it will overflow onto Schedule O. And believe me, I have seen organizations that take full advantage of this and fill up pages of Schedule O. So it's fine. Again, this is a public document that some people, this may be the only information that they find out about your organization. So you really want to make sure that you're providing the correct story of your organization on your form. Real quick, just a final thing here, I just want to make available for everyone to know. We talked about organizations having to make their 990 open for public inspection. The IRS, they do that. So that really doesn't suffice, but that is one way to access organizations' 990s. So for example, if you work at a nonprofit and you want to know the salary of the executive director somewhere else, and so you can, compare your salary, or if you want to see what the other nonprofits are doing, you can access those 990s on the IRS website. If you go to irs.gov, they have a special section under charities and nonprofits, and you can either search by employee identification number or by name. You can also search by name. You just have to remember though, when you search by name, you have to have the correct legal name in order for it to come up. So, some organizations, they'll have their legal name and then they'll have the DBA. So if you put the DBA in, it's not going to come up. So if for some reason you put in a name which you think is the organization's name, but it doesn't come up, it might not be that the 990 is not out there, you're just not putting in the correct name specifically. Again, Candid and GuideStar also have these, but obviously the IRS is the ones that has the official return that was filed, and they have started making these public on their website. So I wanted to provide that link to you. So if you did want to go look those up, you can certainly do that. That is all that I have for today. So thank you all for attending. I did want to share with you just our website. If you haven't visited it before, I encourage you to do so. We do have a lot of resources out there for nonprofit organizations. Sometimes it's difficult for you to get free resources. So everything on our website, all of our webinars are free. We have blogs that we post out there about things specific to nonprofit organizations and specific to nonprofit organizations that we work with in our area. So we know that it's not just something that some random large nonprofit is dealing with out in California. We think these are items and topics that are relevant to the organizations in our area. We also have our webinars out there that are recorded, so you can access those. You can also sign up for our future webinars that we're having. So we just want to make that available to you and give that link to you so that if you are looking for some place to find some more nonprofit resources, whether it be for board training or for Form 990 or unrelated business income or whatever it is, we try and cover a wide variety of topics, and we do make that available to you. So again, thank you all for attending, and thank you for all that you and your organization do for us in our community, and hope you all have a great day. Thank you.